video, we'll be going over Schedule A of IRS Form 8995A. So that would be the qualified business deduction or qualified business income deduction tax form. Schedule A is for specified service trades or businesses. So specified service trades or businesses were defined in a tax law that was passed a few years ago, basically that created the qualified business income deduction. So generally speaking, qualified businesses are any businesses except for a specified service trade or business, which is subject to an income-based phase-out. So if you're above the phase-out threshold of taxable income, then you're not eligible for any QBI deduction. And if you're below the threshold, then you are qualified for the full deduction without any limitations. Schedule A is for people that are kind of in the middle, basically people that are above the phase-in threshold but still eligible for a partial deduction. And so Schedule A has to be done before completing Part 1 or Part 2 of the Form 8995A itself. Now, you only have to complete Schedule A if your trade or business is a specified service trade or business, and if your taxable income is between those threshold figures. So for 2024, if your taxable income was more than $191,950, but not over $241,950, that's for all tax statuses except for married couples filing jointly. Those couples are $383,900, that's the phase in, and then $483,900 is the complete phase out threshold for 2024. So if your income isn't more than that and you're not a patron of an agricultural or a horticultural cooperative, then you don't need to file this form at all. You can just simply file the Form 8995, which is the simplified computation for the QBI deduction, and you'd be eligible for the complete deduction. If you are in that phase out and you are a patron of an agricultural or horticultural cooperative, you would need to complete Schedule D, which is specifically for those patrons before you start on Schedule A. So if your taxable income is above that threshold, then your specified trade or business, service trade or business does not qualify for the deduction. And as with the other forms, there are 3 columns. If you have more than 3 businesses, then you can use as many Schedule A forms as you need. So before we get into the form itself or the schedule itself, let's talk about what is a specified service trade or business. And this is from the form instructions, which basically are kind of verbatim from the law itself. So basically anything in the health field, so doctors' offices, nurse practitioners, dentists. However, services that are not directly related to a medical services field, such as research and development, pharmaceutical sales, medical devices, those are not a specified service trade or business. Anything in the legal field, except for printing services or stenography services. So if you're a lawyer, if you have a law practice, you fall under the specified service trade or business requirements. Anything in the accounting field, to include taxes, tax return preparation, auditors, other financial or other similar professionals, actuarial science, performing arts, consulting, athletics, financial services, except for banking. Brokerage services are considered a specified service trade or business, with the exception of services that are provided by real estate agents and brokers or insurance agents and brokers. investment management, except for real estate, trading in securities, or any skill or trade or business where the principal asset is the reputation of or skill of one or more of the employees or owners, demonstrated with fees, compensation, or other income for endorsing products or services, licensing agreements, or fees for media appearances such as radio or television. So there's a long list of specified service trades or businesses that are subject to that threshold. If your business is not a specified service trade or business, then it is a qualified business that's not subject to this. And qualified businesses do not have to complete Schedule A. So there are two parts to Schedule A. There's the Part 1, which is other than publicly traded partnerships, and then there's Part 2, which consists of publicly traded partnerships. And we're simply going to go through this step by step. So in line 1 and 1A and 1B, we put in Doe Enterprises, John Doe's business, his business's taxpayer ID. These are all numbers that I just kind of came up with on the spot for the purpose of this video. So we're going to put in $100,000 of qualified business income or loss from the trade or business. In line 2, we're going to, line 3, we're going to report the allocable share of W-2 wages from that trade or business. In line 4, we're going to enter any allocable share of the unadjusted basis immediately after acquisition of all qualified property. So we do go into a little bit more detail. You can find that in our article about the how to determine that. But let's just say that this is $10,000. So now we're going to go through a separate calculation in a separate column, starting with line 5, the taxable income before the qualified business income deduction. And this is the part where we prorate how much the phase out of this exemption is. So let's pretend that John Doe is filing as a single taxpayer. His phase-in range would be $50,000. So let's go ahead. What I'm going to do is kind of reverse engineer this so that we happen to be right in the middle and we can see the mechanics of how this this calculation works. So let's see, the middle part would be I believe, let me make sure I did this correctly. I believe that's exactly halfway through. This amount should give us $25,000. Again, the taxable income minus the threshold should give you some number here in line 7. We're going to enter the phase-in range, which is $50,000. So we're going to divide the line 7 by line 8, and this ends up being 0.5 or 50%. And we're going to subtract that from 100% and we get 50%, right? So that's how this works. Let's just imagine that maybe this was $10,000 more. Then this number would be %, and then the applicable percentage would then be 80%. So that's kind of how that math works. For purposes of this, let's just stick with the 80% number for line 10. Now we're going to multiply the applicable percentage of each of these items by that 80% marker. So 80% of the 120,000 would be, 80% of line 2, which is the 150,000, that's going to be $120,000. We're going to put that either on Schedule C of the Form 8995A, or we're going to put that on line 2 of the 8995A. So if you would only need to complete Schedule C if there's any loss netting and carry forward. So if you do have to complete Schedule C, you would enter that amount on Schedule C as directed. And then we're going to do the same calculation for the W-2 wages as well as the UBIA or the qualified property. So again, once we've got this calculation, we're simply going to multiply this phase-in requirement. So these are the amounts, the QBI, the allocable share of W-2, and the allocable share of the UBIA before any limitations. We do the limitation calculation, and this phase-in has determined that we're eligible for 80% of what we would have been eligible for had this been a QBI. Okay, so that's the purpose of all of these calculations, is to get to 80% of these numbers. Now, if your taxable income, let's just say that your taxable income is, well north of this. Let's say it's $300,000. We put in the phase in. Basically, we've got $109,950. We're clearly, well over 100% of the phase-in range. So let's just say that it's 210%. We're going to subtract this from 100%, which leaves us a negative amount or zero. That's how the phase-in calculation works. Conversely, if your income was only $91,000 and we had the threshold, we subtract line 6 from line 5. You get 0. We're going to divide the 0 by the phase-in amount, and we get 0. And then we're going to subtract that from 100. And basically that indicates that we're eligible for 100%. So that's just a visualization of how this phase-in works. In part 2, we're going to do something similar for a publicly traded partnership. Let's just say that he's got DOE, PTP, and he's got a separate taxpayer ID. And then let's just say that we have qualified publicly traded partnership income. So $100,000. So if he had multiple sources, he'd have separate reporting in each of these columns. And then we're going to combine everything onto line 17. And then let's just say that the taxable income, again, is, let's just say that we're at the 201,950. We're going to enter the threshold amount, which is 191,950. We're going to subtract line 19 from line 18. We get $10,000. And then we're going to enter the phase-in range. We're going to divide these amounts in, and we get 20%. And then we're going to subtract that amount from 100%, and we get 80%. Then we're going to take the applicable percentage of the qualified PTP income or loss by dividing the line 23, multiplying line 17 by line 23, and we get $80,000. And this would go on to Form 8995A, line 28. So that's pretty much it for Schedule A of IRS Form 8995A. Again, before you start this, double check a couple of things. Double check that you are a specified service trade or business. Double check that your taxable income is within that phase in, meaning that you're not below and you're not above the phase out. And then also check to see if you need to complete Schedule D before you complete Schedule A. But if you do have to complete Schedule A, you do need to complete this before you start on Form 8995A. So that's all we have for this schedule, or Schedule A. We've put more information into our article about all of IRS Form 8995A, and we're currently updating step-by-step instructions on that article for all the supporting schedules as well. So we'll put links in the show notes as we continue to update our content. In the meanwhile, if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.